So stocks are slipping after hitting all-time intraday highs this morning. My next guest says that while the short-term bottom is likely in for the first wave of volatility, doesn't think it's done yet. I want to bring in Palumbo, Wealth Management founder, CEO, and CIO Phil Palumbo. It's great to have you on the program. Thank you for being here.
Thanks for having me.
So what factors do you see driving market volatility right now, besides the obvious, which is, of course, the Iran conflict?
Yeah, so the first round of this wave of volatility, I believe, is over because I think the Trump put is in, which is something we've been talking about for a long time, right? Last year it happened with tariffs. Trump steps in. He's concerned about markets and the economy, and I think that's what we're seeing right now. So peak escalation of the war, I believe, is behind us. The next focus is the Fed. Around a new Fed chair, there's always a testing of the market, where the average correction historically has been 14%. And the new Fed chair, Kevin Warsh, he is disruptive for sure.
You say that there is risk with the Fed transition, right, and his vote is next week to the full Senate. So what is that?
I think he's going to get confirmed in, but the
Sure.
risk around the Fed, the current Fed, is the idea what he's looking to do, which I believe is bring down the Fed balance sheet, which is around $7.5 to $8 trillion today.
Yeah, he and Bessent have talked about that.
Right. So if he brings down the Fed balance sheet, I do believe that'll help us with inflation and interest rates. But to get there is going to create volatility so the key thing you have to watch is really the long end of the bond market, how they're going to handle that. Mm-hmm. But I do believe in coordination with Bessent that they'll figure out a way to bring down that balance sheet, which ultimately I do think will help inflation over time.
Okay, well, that's better because obviously that stubborn inflation, the sticky inflation that we talk about, seems baked in for some time with the energy shock. And it has been a shock. There's no denying that. So despite for the volatility, you still are looking for an up year for markets. I mean, what tailwinds are you still focused on right now? And what is going to propel us forward?
Yeah, well, first of all, we're in a secular bull market. There's a couple, 3 years more left in this bull market. A lot of it is on the back of the AI revolution that we're seeing, right? The amount of spending. Listen, what moves an economy, what creates great earnings, is stimulus. We got stimulus coming from the private sector with all the spending with AI revolution that we're seeing. We got all the pro-business economic policies from the current administration that we're seeing right now. Mm-hmm. Right? All of that helps move forward in terms of the overall economy, and that's not going away.
You also talk about the midterms.
Yeah.
And you say that that's a story of volatility, and that is something that we have to keep an eye on.
Yeah, I mean, naturally, right? I think the current administration is going to have a tough time in the midterms just because of everything going on with the war in Iran, and I just think people are turned off by that. And people going shopping to the food market and they're seeing high prices, they're getting turned off by that. So a few things that Trump talked about, during when he was running for president, a lot of those things haven't come to fruition.
Well, he needs to go back to McDonald's is what needs to happen. Because McDonald's came out today and said that we're seeing a pullback.
Right.
And when you have somebody like McDonald's saying we're seeing a pullback, that's a little bit of a red flag. I think that should be to everyone right now.
Right. So remember, we're in a K-shaped economy. The middle-income families, low-income families, they're having a hard time right now, right? Yeah. High-income families, they're doing okay. And the other key statistic that people should be aware of from consumer spending standpoint is that 110 million baby boomers that are going to continue spending. This is the next chapter, one of the best chapters in their life. They're not going to slow down spending, and that's why consumer spending continues to be strong. Mm-hmm.
But they still probably like McDonald's. Just want to throw that out there.
Of course they do.
All right, let's talk. I love this pick from you. So this is Joby Aviation. Mm-hmm. New investment in your emerging growth strategy. Now, it stumbled after the first quarter, but you say, and I think this is key, that this type of transportation, this is the future. You love this stock.
Yeah, so first of all, my emerging growth strategy, where it's an investment in future companies, like the next Amazons and NVIDIAs of the world. That's the goal, okay? Yeah. So this is very speculative. It's pre-revenue. There is revenue, but it's really coming from Blade, so investors have to understand that, the audience that's listening to this. However, the key thing about Joby is they're solving for what we all need to be, we need something to be solved for, the problem in this country, which is congestion of traffic. If we can solve for that, which Joby can, that's the key, right? That's what makes companies great, like Uber, right? Would solve for hard to get a taxi, and dealing with the taxi companies back in the day was a disaster. And now Uber just makes it a lot easier and simpler to get, buy an app and you get all of a sudden you get a car and you get a service. Joby's going to solve for the congestion problem we have.
And they've got that huge new manufacturing facility, and the FAA is on board with them.
Right, so they're in the ninth inning with that, which is tremendous. So you're going to see a lot more with Joby, but again, very risky, just so your audience knows.
Just absolutely. Yeah. Real quick before you go, I got to ask you about commercial real estate. You say that what was bad before is good now.
Yeah, so it's the old adage, buy low, sell high, right? Commercial real estate, since rates up March 2022, right? Rates up, commercial real estate had a difficult time. So commercial real estate went down. Now it's trading sideways a bit. The biggest thing about commercial real estate is the shortage now, right? So builders overbuilt before 2022. Now that's the opposite. There's demand coming in play because of warehouses with e-commerce growing by 30% or greater. Industrial property need because of reshoring and onshoring, and multifamily need due to mortgage rates are high, people need to rent, rates are high, inflation's high. Landlords get to raise rents, which ultimately increases the price of those properties. So that's the benefit.
Yep. Very interesting perspective on that. The tide has turned. Phil, it's great to have you on the program.
Thank you very much
for being here.
Thank you.
All right. Well, we've got a lot more coming up. We are going to be speaking with Congressman Darrell Issa in a year where several high-profile races are taking place in the Golden State, California. Now, he's out seeking re-election. We're going to discuss what that means for the GOP and our nation's largest state economy. It's coming up next, Making Money.